G'day all, welcome back. Money in the Tank episode 34, all on top of it today. A couple of fellas beaten down by the flu, but we're here. We're keeping to our word of Thursday recordings and keeping all our listeners up to date with all the news of what's going on in the world and Australia predicated. So without further ado, let's introduce ourselves. So Joel Seach, Principal Advisor, Harper FG.
Yeah, Brad Tabone, Generalist.
And Arnie, Tax Professional.
Welcome back all. So we're here to talk all things finance with you guys, have a bit of fun along the way and try to keep you informed and up to date of all the goings on lately in the latest week of Roundup. So without further ado, let's hit up some Rivkin's rules and then we'll get stuck into some of the latest news and tidbits going on. Alrighty, so page 106 of Rivkin's. Men and women are designed to be together but not to live together forever. Got no idea what that means or what it's.
I'm not touching that.
Book. No,
from a personal finance perspective, I don't know what that's got to do with anything. Like,
no idea.
Like,
that's in the book.
That book's meant to be about. That's meant to be about personal finance, isn't it? That book.
Yeah, you'd think so. No idea.
Move that one along.
All right, so let's go. Should we do Renee on life? Here we go.
Renee on life.
Here we go. All right, so 2 on this one. Live with passion, and then the second one is unless God is omnipotent. Omniscient and benevolent, I am not interested. Therefore, there is no God.
Oh my God, Renee!
And he's got Renee and the Baywatch team on a page here. How's that? This guy's just a classic, mate. Unbelievable.
I love it.
And it just shows like the 90s.
Yeah.
Oh my, yeah, it's very dated world.
80s, 90s. It's just gold. I love it.
Pure gold.
There's nothing to expand on that, really.
There's nothing to expand on any of that last 3 things. Life is about passion, people. There we go.
Life is about passion, absolutely. So let's kick on with all the goings on in the world. There's been a bit happening the last little bit of time. So I guess the item of the week this week is the big elephant in the room is interest rates. And the RBA, which is the Reserve Bank of Australia, which is our central bank here, raising the rates by 50 basis points, which is 0.51% from, or to 0.85, isn't it? From 0.35. So they did it was 10 basis points for a 25-point hike last month, first Tuesday of every month. So they got it to 35 basis points. It was
only a 20 basis point hike. I think it was 0.15.
No, it was 0.25 because they went from 10 up to 0.35.
10 to 35, and then from 35.
75 all up.
Yeah, first Tuesday of this month, they went up by a double rate hike. So usually a normal is a 25 basis points. They went by 50 basis points. So that took it to 85 basis points, which is starting to get back to, I guess, where we were pre-pandemic, which I messaged you guys about back in May of 2019. I think interest rates I mentioned or I sent a screenshot was about 1.5 or thereabouts. It was kind of reverting to the mean essentially is where interest rates were pre-pandemic.
As all things do, everything returns to the law of averages over time. Yeah, I mean, I think as of this morning, all 4 banks, the big 4 in Australia, that have passed it on. Yeah, so it was at 1.5%. The Reserve Bank was 1.5% in May 2019. So essentially, it's going back to, or slowly getting back to, or probably quickly actually, as to where it was. Where are we now? About 3 years ago. They're about similar time 3 years ago. So I think the new variable rate is about 5.3 is the kind of at Commonwealth at least.
Fixed rate, you mean, or
fixed rate?
Standard variable 5.3.
Before discounts,
before discounts and all that kind of stuff. Obviously,
stuff,
different banks choose different things and all sorts of stuff. It's going to standard variable rate.
So fixed rates, you're probably a little bit late jumping in, to fixed rates now because they've sort of come up, and the rates, the actuaries at the banks are sort of already factoring in.
Shout out to my sister on that one.
Yep,
I've been saying for about 12 months, and then she messaged me the other day going, "I think I'm too late."
Yeah, probably too late, missing the boat there. Fixed rates have definitely ramped up now, but variable rates are still lowish compared to what the average median or mean is over a longer term average. So with the media and whatnot, they're loving it at the moment with people being surprised at rate rises and extra repayments. It's like it's what do they expect was going to happen when you're at historical all-time lows of interest rates? Do they think they were just going to continue to stay low or go negative?
I just find hilarious the media side of things, how quickly they just jump on the bandwagon, the whole fear thing. It's been coming for ever in a day.
Yeah.
And, they find the one couple. I mean, anecdotally, I've had a couple of people in my life act a little bit surprised. So I've got to say that. But, the classic things in the news of, new home buyers have $850,000 mortgage. First time they ever bought, they bought in December and suddenly they're already, $300 and whatever dollars shorter and they're already at there. But I mean, that is unfortunately, due to housing prices increasing 25% over the course of the pandemic to all-time highs. And a lot of borrowers kind of, trying to get into the market. It really has kind of, I think, even in the RBA notes, there was a comment on, I think, the amount of like discretionary spending that's going to occur just from inflation. Like monetary policy is going to pinch in Australia. Yeah. And I think I was chatting with my accountant last week, or Hamatech's accountant, I should say, at least my business accountant. And he gave me a stat which kind of gave me a bit of a, there's over 10% of home loans that is coming off fixed in the next 12 months.
Really? So, actually that probably makes sense.
High single digits or possibly low double digits, which made me go, that's going to also, it's not just like the now everybody, obviously, if that's coming off in 12 months time.
And fixed have never been the preference. Like majority, I believe, has generally been like the spread has been skewed a lot more heavily towards variable. But obviously fixed during that period, the last couple of years, people were like, okay, well, we can't go much lower. So let's fix now. And, when you're fixing, you usually fix 2, 3, 4 years, some do 5, but you don't generally get too much more than that. So you'd expect obviously they'll come off and then people probably then just revert it back to the old variable, which was generally the majority of loans anyway.
My situation, like I told you boys last week that like we did not fix, even though we saw it coming a mile away because we want to sell. And now I'm eating those interest rate rises. Interestingly, Joel, you were mentioning that interest rates were up at about 1% in 2019, but 1.5, but the cash rate from the RBA, this is the first time they've lifted it since, I got it here in a note, first time they've lifted it since November 2010.
Back in last month, you mean, the first time they lifted?
Yeah, sorry. So that one, when they lifted it up to 0.35 or whatever, that's the first time they've done it in, how long is that? 12 years.
12 years. It makes sense. I mean, GFC. And they started dropping. I mean, what did it start at? What did the cash rate start at back then, Arnie? I mean, quick Google.
Was
it around kind of like, at 0.85 at the moment, was it around kind of like 4s?
You'd probably be right. Maybe get snuck up to the 5, maybe
under the 5s. Because I remember, I remember saving rates back then used to be.
You get term deposits at a decent rate.
You get 4 to 6%.
I've got 2008 data here. Yep. So September 2008, cash rate was 7, and then monthly after that, it dropped to 6, then 5.25, then 4.25. So obviously in 2009, that was
I think that's a good data point though, in terms of if you have a look, back from that point, Arnie, back to early 2000s. I think if you looked at early 2000s to 2008, 2009, I think you'll find 6, 7 cash rate as probably the, bumping between the two.
That was sort of, it was more the norm, like the norm back in the probably 80s or 90s. They always talk about double digits, and then your 2000s, it was kind of your single digits, but skewing towards the above 5s, and then in the modern era and today's rates, the new norm could end up being a band between 1% and 3%. Like it's sort of
I think if we look at the US and they're targeting about a 300 basis point uplift over the course of a year, and a lot of people are saying they're going to do double 50s now, and then recalibrate probably to 25s. I mean, we are probably heading towards anywhere between a 2 and a 4 cash rate. And what that means, I mean, RBA is different, Australia is different kettle of fish, all the rest of it. But a lot of the inflationary problems are the same in terms of a lot of cash out there, supply issues, a whole ream of things. They're saying that, there's $2 trillion sitting on the sidelines in personal bank accounts now, just in the US. And so kind of like the bottom end of town's obviously going to get hit, as they always do.
Don't forget about Iceberg lettuce. If anyone's got any Iceberg dealers out there, let us know.
Funny you say that. I made fish burgers last week, and and I went and bought one. I went out. I found some lettuce to put in there. It was cos. It wasn't the
No,
iceberg.
not iceberg. Not
It was
the,
just
not
the
the
cos.
holy.
I'm
Not the
talking
holy grail.
a baby can of cos lettuce cost me $4.50 because I put it through and I went $4.50 for a baby cos lettuce, and I was like, okay.
We were at the shops the other day, and Aaron just texted me casually saying, "Can I get an iceberg lettuce?" And I didn't know this whole hoo-ha was going on at this stage. So I've walked into Woolworths thinking, "Oh, yeah, I'll just ask the young bloke here." And he sort of looked at me strange. He goes, "No, mate, no icebergs." I'm like, "Okay, well, I'm late to the party." But then I looked up on the shelf, and they had that $2 packet iceberg that was cut up, and there was like 3 packs left. And I thought, "Oh well, I'll get that, and that'll do the job." And little do I know, that could be the last iceberg I get for a while.
The big news this week has been KFC's changing
cabbage.
They're mixing cabbage
and Subway got throwing the cabbage in there. So
and Albanese came out saying this is a catastrophe basically, and he's going to work on it in a part of his emergency inflation team. I do love that. With that said, I had cabbage this week on my fish tacos.
We're all dealing with cabbage now. So.
We're all dealing with purple cabbage. So, I mean, the thing that I kind of look out for and chain to people is if the new rate's going to be between, let's just say, 2 and 4%, 200 and 400 basis points cash rate, we still do have, luckily another 1 and a bit to 2 and a bit on top of where we are at the moment. And so if you're looking into the forecasting, everybody, and again, this is not financial advice and we don't know what we're doing, but if you want a kind of a bit of an opinion, if you're looking at your forward budgets and stuff like that, I wouldn't kind of dig your head into the sand. Is kind of I take a conservative approach because
general nature.
If you're wrong, you end up with more money anyway. So
there's going to be a balancing act essentially that the RBA is going to want to lift rates enough to try to keep the inflation genie in the bottle, but they don't want to lift it up too much where it starts to create kind of issues in debt management and repayments and stress, huge stress testings. And when you are getting mortgages, they do factor in multiple interest rates on top of the rate you're paying at the time. I think it's like a 9 or a 10 times basis point carve out. So it's sort of, they're adding an extra 3.5 or so, or 4% on top of, what the rate you're actually getting it at the time. So they do stress test it and put it in there, but then you're working in your real life budget. So you need to factor that in to that.
Most pundits, and as Jolly would say, take this with a grain of salt or no salt at all. I forget what your classic line was a couple of weeks ago, Jolly, but most pundits are saying, Brad and Joel, every quarter from now on will be another probably 50 basis point hike until we get to around 2.5%, then see what the economy is doing. And as Jolly said, as Jolly sort of just hinted at, which we're going to talk about later, they're really trying to thread the needle of, not slowing the economy too much and putting us into a stagflation scenario.
Yeah, and I think timing's everything. And I was listening to, my mate Jamie Dimon and
JP Morgan.
And he's changed that. Headwinds are coming to the hurricane down the road. Yeah, we just don't know how big it's going to be. I think there was a couple of interesting things that kind of he said that kind of made me go, okay, yeah, it's an interesting kind of. I know that there's a balancing act with the reserve banks around the world, the central banks being kind of stuck between kind of like a rock and a hard place. But the thing that kind of stuck out for me was we've never been through quantitative easing, right, to the scale that we've just done. So we had obviously the GFC, but let's just carry the GFC onto now. It's the last 14 years there's been quantitative easing. We've never had. The central banks have never had to kind of balance. There's been no previous history of trying to curb inflation whilst in the US at least doing quantitative tightening at $95 billion a month to try and unwind their balance sheet. And all central banks are going to be trying to do quantitative tightening. And what I mean about quantitative tightening, I guess, for the tankers out there is quantitative easing with where the government was buying their own bonds and pumping money out there into the economy. Quantitative tightening happens after quantitative easing as central banks kind of tighten their balance sheets. And what they do is they just let bonds and other securities, instead of rolling them over, they just kind of let them reach maturity. And when this happens, the Treasury Department then removes it from its cash balance. And you're seeing kind of 10-year bonds in the US as well, because they're trying to get rid of them because they've bought so many bonds. The cash rate for bonds 10 years is about over 3% now. right? They're having to pay over 3%. And so it's kind of like this. And I think it's kind of like trying to play that game where you're having to tighten up because otherwise, you're just pumping more cash into the economy and inflation. But at the same time as doing monetary policy and kind of increasing interest rates. And then at the same time, a situation and another point that he kind of said that made me go, oof. Actually, it was someone else after him that said it, but same kind of topic where historically for every 10 people unemployed, there was 6 jobs. Across all markets, 6 jobs. And it's kind of one of the major labor statistics that this guy follows. The highest previously to now was 15. So for every 10 people, there was 15 jobs available. At the moment, it's 24 jobs in the US. And I know the Australian economy is different, but we have got a labor crisis the same as, and labor shortages the same as if not a little bit less, a little bit more than the US. But I was down in Docklands yesterday for a meeting at Collins Street where the Australian kind of passport place is. And there has been for the last 3 weeks.
Technical name,
everybody. So when I went in there in March to pick up my passport because I had put mine through the washing machine before I went to Patagonia, as Brad does.
As Brad does, it's very
I had to pay my
Brad.
extra fee and get it within 48 hours. I just walked in there, walked upstairs, parked in the 15-minute spot, and was able to pick up my passport and run out. Right. Yesterday when I was in there, they said the average wait time was 4.5 hours because they don't have enough people working in the passport office. And so there was a line of 250 people outside waiting to pick up a passport. And so they're trying to balance at the moment, I guess, job, resource, like low unemployment, but at the same time, a mismatch of resources with quantitative tightening, with trying to get inflation on the thing. And so it's going to be threading a needle. He's
quite the concoction, quite the cocktail of economic inputs to balance, and outputs to balance. So it's going to be a crazy time. And just last bit from my end on this before Arnie can wrap us up is keep an eye out for when the old government will jump in, and both parties love doing this, is when the RBA raise rates and the banks come out and say we're going to pass on this or pass on that. It happens more when it's going down, actually, because they pass on, if the rates come down by 25 basis points and the banks go down by 15 basis points, the government comes out and really yells at them. So you wait and see if the banks put up any more interest on what the actual RBA goes up. You watch the government jump up and down and sort of tell them off like a toddler. What the banks care or even give a crap what the government says, but they love kind of showing face like that and sort of saying, don't do that. We're here for the people, and the big bad banks are the baddies. But that's always I always have a chuckle at that, because the government has no real control over the banks, what they do with their interest rates, and just like they have no real control over what the RBA does with interest rates. Yet they
shouldn't. Yeah, right? I think that's the key. Is that, like, they are supposed to be independent. So for everyone out there, tankers, when you read
free market economy,
free market economy. The central banks and the banks are supposed to be able to do what they do. They're independent.
Exactly.
What? Like, anecdotally, I've had a few people say to me during the week, like, "Why is the government doing this?" So it's a funny point that you raise that it's not the government doing this; it's an independent body, the Reserve Bank of Australia, who is doing this, the RBA, and they're doing it for good reason. So, like, as I was going to use it, like, say this for the finance roundup, just talk about stagflation, but in general, the reason they're doing it, as you have both alluded to and I've alluded to, is they're worried about a slowing economy, but they also need to try and address the part of the equation for inflation that they can address. And at the moment, they can't address the supply side, so they're addressing the demand side, and they're doing that by raising interest rates. So it's necessary pain that we're all having to go through. Otherwise, you're going to have inflation run rampant, the cost of living rise further than it already has, with the potential to harm our currency. And then, as Brad was saying the other week, he was in Chile and now some ridiculous inflation figure you were saying, Brad. So it's just like, it's one of these things where no one likes paying extra money. No one likes raising interest rates.
No one likes paying $10 iceberg lettuce, or having
$4.50 for a little,
or having a deal with cabbage on their fish burgers.
I don't mind a bit of cabbage. Let's not make cabbage the enemy here, but it's just, but anecdotally, I've heard people say that. And it's like, it's a good thing.
It can get run away, everybody. You only have to look at Sri Lanka, Turkey, Pakistan, Argentina. Venezuela, like there is, and these countries, like Turkey is not a small country. Its economy was bigger than Australia. So
Spain.
I mean, Argentina, it's 135 million people. These are not like downtrodden, third world.
And the thing they're trying to do, and the reason they're going hard and fast, is there's no surefire science to this. Yeah, if they raise interest rates, it's going to be short-term pain. The reason they do it, though, is that if you do not raise them hard and fast, you run the risk of having inflation baked into our economy and being with us for a longer period of time. So hopefully, if we have a combination of interest rates rising and then the supply chain pressures easing over the course of the next 24 months, things will get back to a relatively good space for us. Fingers crossed.
Fingers crossed, because at the end of the day, I think we'll end up on this. Having cabbage in your burger is better than what I saw for 7 weeks in Argentina, speaking to people where they literally have to plan day to day. I would take cabbage in my burger over that.
Yeah. So, inflation, the government or the RBA wants certainty. They want some consistency. You don't want to be worrying about what your cost of lettuce would be from day to day, or what your cost of wine would be. I think, as Brad mentioned too, at the restaurant one night, it was $20. What the next night it was $30. You want consistency because you're able to then plan out your lives. So I guess what the government's got to do now, and what they will try to do, is they'll try to control and work on, what's wages are going to be from union side of things, and what, how all those things will factor into inflation as well, because they'll pull some levers from their end. Which
look at the physical side, right? This is physical, monetary.
Yeah, and then obviously, as I've said in numerous podcasts, they want to try to get the opening of the economy back up for tourism and working visas and tourist visas and all those things, because they all play a vital role in helping the economy rebound and help that supply chain issue of from staff shortages anyway in particular. So
I think that visa, working visas for our kind of produce is going to be, because we're a net exporter of produce. So I think that's going to be the key to the lettuce.
So hopefully that wraps up a bit of the interest rate topics of and inflation topics of this week, guys. Any questions on that? Feel free to reach out and yell out and hit us up, Arnie.
Yeah, get us at Money in the Tank on YouTube, Facebook, Instagram, and Twitter. And I think I might title this episode the saga of the iceberg lettuce. But cabbage. Yeah, please send us in any comments, questions, feedback, or just say hi.
Or the most you've paid for some iceberg lettuce. We'd love to know that as well. What's the most you paid for a bag of that $2 iceberg lettuce? Has that gone up? What's the most you paid? Have you taken any leaves off the shelf? Have you gone through the grocery aisle and taken a few iceberg lettuce leaves in your trolley?
Stealing a few iceberg lettuce leaves.
It's the new green. It's the new green gold.
And if you've got any good dealers, let us know. Thanks.
Yeah, let us know. So, perfect. Next topic you want to touch on, Arnie?
Yeah, we're going to move on to the crypto roundup. And then after that,
have the screen?
After that,
absolutely.
After that, we'll do a bit of a finance roundup, and I'll do another rapid fire news headlines, which I've got handy here as well.
Nice.
Yep, no worries. So Brad is now the host. He'll share screen for the people watching us on, I guess, YouTube's the platform people watch us on.
Correct. Otherwise, I'll talk to it anyway. Crypto roundup. So, as usual, CoinMarketCap, having a look at the week that has been. Your top 15, 16 coins. I think Shiba just sneaks in there at the bottom, Arnie.
Yes. Get in there, Shib. Oh, wait, I can't see it. Where is it? It's not on the screen.
Right 16, right at the bottom.
And right at the bottom. Look, pretty flat week. The only one is that's really shooting for the stars is my little ADA, which is up about 14% for the week. I think I've talked about this one for the last few weeks, but continues to get a bit of strength. There's a lot of money pours in from different networks, but pretty flat week overall in terms of prices. They've just been kind of volatile, as you can see on the right hand side here. A bit of up down. Between Bitcoin sitting between about 28, 29,000 and about 32,000 at the moment in that band, and has been for a couple of weeks now. In terms of key kind of bits of information over the last week, just got a few. US senators have introduced a new crypto bill outlining sweeping plans for future roles, I should say. It's a kind of a wide-ranging bipartisan bill introduced where they're seeking to kind of extend on the regulations that they've got now. It's been put up there and it's probably going to be discussed for the next year. But it's a very good starting point where they're basically looking to not put any transaction that's less than $200 and make it tax-free, potentially clearing a path for cryptocurrency to act more like money and currency. So at the moment, if you sell and buy cryptocurrency even under $200, even in Australia, the CGT implications if you bought it here and you sold it here. And so they're starting to say, well, transactions less than $200, if you buy and sell and use it for that, there's no tax implications. So to try and turn it more into a currency, and granting new powers to the Commodity Futures Trading Commission rather than the SEC. So this is just important because generally what happens in the EU and America around regulation, people look at it from all around the world, and it kind of can influence things. So it's just one to watch. And New York State, which is, again, it's only a state in America, but kind of New York State regulation kind of does hold a bit of weight in the global side of regulation as well. They've released some guidance for dollar-backed stablecoins. So they've come out and basically said these are the redeemability, what capital reserves you need, attestation, that a stablecoin must be fully backed by reserves, and then kind of, it has to be, the reserves have to be segregated from proprietary assets. And so what all this means, tankers, is, with Luna and algorithmic stablecoins losing so much kind of value and kind of everyday people's money from it not being necessarily backed by he's laughing there.
My $100's gone.
I mean, no,
Goodbye.
$99 and probably 93 cents at this point. But no, or 100 because that could turned off. Is that, if you're utilizing stable coins and you're in the state of New York, now you've got to any stable coin that you're using has to be backed by money and has to be segregated away from other assets. You can't be using kind of bonds and all sorts of things to be saying that you've got your capital requirement. So
That's
I guess it's turning it much more into a regulated. It's saying that it's okay and it's got its place and they want to keep using it, but at the same time, here are some regulations around it to stop what happening. And so
how will they enforce that, Brad? Have they talked about it, or is it just speculating? Because if they're from New York State, right? How are they going to tackle something like Tether?
Yeah. So look, Tether. So what New York State is saying is that Tether, because it's not dollar backed and the reserves aren't segregated because they use heaps of underlying different kind of asset classes. Yeah, correct. And what they're saying is that the use of Tether, if you're in New York, won't be allowed anymore because it doesn't meet regulations. Now, how can they enforce that? Right? Is they're investing a lot more money into blockchain analytical companies, and because they've got KYC on the majority of the exchange and the rest of it, you can still get around it with cold wallets, and if you're not ever touching the exchange and the rest of it. But a lot of the majority of people that I know, move money to exchanges, whether it's Kraken, Coinbase, Binance, KuCoin, all the rest of it, they've all got KYC. And so if you ever touch that, the analytical tools can kind of pick it up. Whether or not they enforce it, I think what they're going to be doing is more enforcing the stable coins. And so what they do, and what they've done in the past with Tether is they've, obviously they fined Tether. It was New York that actually fined Tether along with SEC originally. And what they make them do is a monthly audit signed off by accountants. Now, Tether supposedly, like I said, have been used kind of a bit of a mixy bag now that it's kind of specific and saying that it's dollar backed. So USDC has kind of the premium audit that comes out with full transparency every month of here are the amount of stable coins. Here's our dollar backs. And so I think it's just going to form just like any other financial audit on companies.
Very interesting. Oh, watch that space, tankers.
Yeah, watch space. Yeah. So that is crypto for the week.
Thanks, bro.
No problem.
Yeah, that's a good one, mate. Do you want me to do my rapid fire headlines, Jolly, or have you got something you want to discuss?
Rapid fire, or sort of medium fire?
I'll go medium fire. We can discuss if you want to. If we can discuss along the way, medium fire. Rapid fire is too fast.
You're bringing up your mate as well.
My mate Elon. I haven't got anything Elon specific, but I could work him in here. Don't worry.
No. He sent a letter, right? He sent a letter to Twitter.
Did he?
He sent a letter to Twitter. Yeah.
I'm not across
last couple of days.
Oh,
he's still trying to bargain down the price. I think he's sent a letter saying he's not happy with what is it, the legality of their agreement with the disclosure or non-disclosure of bots still. So he's still trying to push that wagon,
and
isn't he?
supposedly Twitter came back and said that they're going to comply with Elon Musk's demand for data on fake accounts, because they basically say, you prove to me that it's not more than 5%, and they're coming back with data. So there you go. We got to mention Elon.
Well, sorry, I did know that his lawyers were saying that Twitter was making it really hard. Like they were like putting roadblocks up for him to get the information. So interesting to hear they're going to come back. And
this is as of 5 hours ago. They only came out this morning in the US.
Oh, gee, I wonder what the share price of Twitter is going to do, because people have been like hot and cold on that arbitrage opportunity. And if it still goes through at 54.20
a share, a gamble. Arbitrage. I like to call it a gamble.
Yeah, same as the Microsoft Activision one. What's the share price, Brad?
So when that news came out.
I'll carry on while you look.
You carry on,
when the
mate,
news came out, it went from down to up 1%. It's only moved 1%.
But what's the price at the moment for Twitter?
$40.44 USD.
Then, man, that's a fair swing away from 54.20 still. Could be worth a small gamble. Anyway, not financial advice, general in nature. Do your own research. And if you can't tell by my lunar investment, I don't mind a bit of a punt. So,
and Arnie, you've got my you can read my headlines as well, mate.
Oh, yeah, I'll read the headlines. Well, let me just do the rapid fire ones first, and then we can talk about those other interest ones. So there's a Chinese property developer, Country Garden, set to open 1.7% down because Fitch has placed a negative rating on it. So there's more of this news coming out from China about their property developers. Also, China, there's COVID virus. They reckon the wind is blowing COVID virus from North Korea into China. So have you guys heard this news?
No.
Yeah, so that's a bit of an interesting one. So they've got concerns there about manufacturing again. So it's got practical applications. Apple to handle its own lending.
Just replay that one for me and tankers. The Chinese government is saying that the winds.
Yeah, the wind is blowing COVID from
North Korea into China.
Spot on, mate. So so they're a bit worried about how it's going to affect jobs in China and their lockdowns and things like that. So
they're great.
It's interesting. But Apple, have you heard about the buy now, pay later? Apple said they're going to handle their own financing themselves, doing away with their traditional financing company they've used for their Apple Pay and Apple Wallets. So
turns out Apple has about $290 billion sitting on the sidelines and went, we're pretty well capitalized to be able to probably offer our own.
Yeah, they got a lot of cash, and I think there was talk about them doing a deal with Square for their in-app payments as well. That which might link up to Afterpay, which was what Square acquired. So I want to get more information about that.
And crypto with Square.
Crypto with Square. Oh, can you buy crypto? You think they'll be able to buy crypto through
Square's
the Apple?
Kind of future, so that's why Dorsey kind of left Twitter and went back to Square.
Yeah, I'm aware of that, but I'm sort of thinking from the Apple lens.
But what I mean is they're looking to integrate Square into Apple more, and Square's big future is around kind of cryptocurrency. I think there's a big play there.
That's interesting. And the last bit of news I've got, boys, for rapid fire is Volkswagen actively looking to build new EV and battery facilities in the US of A. So
that's pretty rapid fire, I think.
Yeah, well, you said medium fire. I could go faster.
Yeah, that was rapid. That was rapid.
Well, that's what I'm going to try and do in the finance round, and then we can discuss a few of the ones. So, Brad, you had a very interesting story about that you shared with the boys, and it was the fact that OnlyFans creators, not the top tier ones, but I guess all of them.
Some of the top tier ones, they've gone from six figures a month, down to a mere only 30, 40,000 for those top ones, mate. And the other ones, they're down 50, 60% in revenue, and they're stating that the discretionary spending is around the world, and the tightening of belts is hurting them.
Yeah, well, you and I were talking a couple of weeks ago. I think it was one with Jolly Miss about how we're looking at.
What was the Twitter handle of that person then?
Oh, God, I can't remember the name of that chick who said
I think it was Reverse something.
Reverse Cowgirl 69?
Yeah, I think that's what it was.
But I don't know if you missed this one, Jolly, but we found this tweet from a stripper saying it's something like, they say the strip club's a leading indicator of recession, and I'm telling you all, we're in a recession. And
I've had two friends forward me the same article over the last 3 weeks, and I've gone, you guys should go back to our podcast. We mentioned that 3 weeks ago.
Yeah, so we're looking at the ticker RICK, RICK, which owns a lot of those venues in America, and this is not a joke. We're looking at it as a recession indicator in America. So yeah, OnlyFans, what do you want to call them? Contributors. I don't know what the politically correct term is, but they're feeling the pinch in the pay, and people haven't got as much discretionary income as they once did, and that's what services like that are gonna take a hit.
Mm-hmm. I think the OnlyFans one was just interesting because it's discretionary, like generally money that people are pumping into these services, and not all of them are pornographic. So it's just that these services have probably, I'm sure that YouTube tips and Discord whatever's and Twitch whatever's, they're all probably suffering. So
you also have the cash to throw around. And the other one you were going to touch on, Brad, was
noble gases.
Yeah, please do.
Yeah, so noble gases. So Russia about 5 days ago now, have put a ban on export of noble gases. And I thought, noble gases sounds very noble. And what are these noble gases? And turns out neon is one of the main noble gases. And I think we've touched on this before for tankers, but if you don't know, neon's a key component in the lasers that actually make the semiconductors or help print the semiconductors. And the more accurate the lasers, the more neon they need. And so it's a top end of semiconductors. And we're already in a semiconductor kind of supply shock and shortage around the world. And now that neon gas, and Russia makes, between Ukraine and Russia, but about 70% of all neon gases. And so, again, it's not one of those things so neon gas, again, just for general knowledge, because I'm a generalist, neon gas is something that's all over the world. But I think in the air, like of the air that we breathe, it makes up about 0.00035%. And so you need massive, basically air purification, processing machines to suck up massive amounts of air to actually capture enough neon. And in Russia, so no one can really kind of fight with Russia because they had it from the Soviet Union as a part of their steel manufacturing. And so no one could kind of meet them on price. But it is one of those things that I think with kind of globalization and the things that we're talking about, where countries are going to start having to rely on themselves again, I think it's just kind of watch your space. But it's probably going to be another 1 to 2 year kind of supply shock, unless, of course, like a good friend of mine, Andy, this morning said, imagine if this just one day Putin woke up dead and they just said, let's get along and let's lift all the tariffs and get along. That'd be a nice world, wouldn't it? And not getting into politics here, but unless there's some kind of major changes there, I think the neon supply, because really Russia makes the majority of it, is going to hit semiconductors quite hard. But good news, I am not all about bad news. Good news, Russia came out yesterday in tandem with Turkey, and have stated that in conjunction with Turkey, they're going to start allowing the free flow of Ukrainian wheat into the broader global markets. And now I'm not sure if this is because Russia had taken their navy away from the Black Sea ports because certain countries have just delivered anti-navy missiles, or if they're trying to play good guy at the same time and say, well, we're not trying to hurt the world with kind of food shortages, and wheat being kind of one of those key things. So what's the price of wheat, people? We've talked about it going up, but if Ukraine starts pumping back into the markets, we may see a positive. So one bit of positive news.
I like it, mate. It's good to have a balance of positive and negative, isn't it?
Yeah, I usually am more of a pessimist, but I'm all about optimistic news when it's there.
Bit of glass half full. Bit of glass half full.
Bit of glass half full.
When you deal with news, I feel like it's very hard to find optimistic news quite often. It's mainly pessimistic because it gets the clicks,
Well, that's the thing. I think we try to sort of dispel a lot of the headline myths that the news media and aggregators will try to
100%
push on people. We try to sort of read between the lines, and that's sort of what we aim to do, is to try to bring the people the truth and a bit of the between the lines of what they're trying to sort of say with a headline. And a grain of salt, absolutely.
Grain of salt.
Cool, guys. Perfect.
So.
On to our new favourite segment, my new favourite segment anyway, which is...
I was about to say, you can't say everyone's favourite new segment.
It's my new favourite segment. Where in the world is Brad Tabone? Oh, that's beautiful.
Where am I, Arnie?
That's it. Well, that looks like I forget the name of those things, a pedagogue. No.
Yeah, but where am I?
You're in Japan, yes. For sure.
Not really sure why the old message here comes in.
It goes with you around the world.
It literally does. It's come from the US to Australia, so it literally does. Follow me.
Pagoda.
This is back. This is just outside Tokyo, actually. Sorry, this is Fuji Mountain in the back. So here in 2019, and in Japan, of all places. And the reason why we're talking about Japan is because during this week, one of the content sources that kind of I follow. Visual Politics put out a very interesting piece on the drop in the power of the yen. So we travel around. This Bradley Tabone just goes to all the places that he's been around the world. I think we've got about 64 shows lined up, and just discusses something about kind of a bit of financial news around what's happening there, and what opportunities. There's always an opportunity, people. General advice in nature: don't follow, do your own research, all of that kind of stuff. But when we're talking about Japan, couple of key things. And Jolly, do I have the power of share screen still? I do.
What can you do, mate?
Excellent. So Japan, couple of fun facts real quick. Least foreign investment out of any country in the world. Yep. I know they were a closed society, but seeing as they're like a top 5 economy, I didn't really think they'll be the least in the world. But there you go, least foreign investment in the world.
Yeah, they're big to themselves, the Japanese.
They're very much to themselves.
They're happy for you to visit, but they don't really want you to stay.
Well, they want you to visit, but they also don't want you to go into certain places because there's actually signs that say
Japanese only.
Yeah. They want to keep their culture.
They keep their culture, yeah.
Kudos to them.
I was at a conference yesterday. Interesting tidbit for Japanese: the life expectancy of the Japanese people is far greater than a lot of the other OECD countries. I think it was by a number of about 5 or 6 years.
Yeah, so 5-6 years.
Something in the water in Japan.
Yep. And compared to Russia, it's actually like 10. Truth. Average male, I think, in Japan's like 82 and Russia's at 72. So,
yeah.
So it's one of the most important currencies in the world because it is one of the largest economies in the world. It's lost 1/5 of its buying power of the Japanese yen against the US dollar in a year. And so there's a couple of things going on there, everybody. 10-year, I think we mentioned before, 10-year government bonds in the US are going 3% or higher in return, where the Japanese government is coming out with a policy of trying to keep it at 0.25%. And why is that a problem? Because people are starting to say, well, if I've got Japanese yen, I better swap it over to the USD, which creates demand for the USD, because getting 0.25% of my money versus 3% of my money doesn't sound like a very good idea. Also, they're doing this by kind of also buying their own bonds, kind of what quantitative easing was, and Japan has been doing this for forever and a day. And government debt stands at a nominal 240%. And so they're a little bit afraid over in Japan. Another reason is because if basically the bond rate goes up by 1 to 1.5% or 100 or 150 basis points, it's an extra $120 billion a year to finance their government debt.
And they've always had an issue there with an aging economy and not enough kind of regeneration of young people and not enough consumer
demographics
spending.
is playing out in Japan ahead of the rest of the world.
Yeah,
whereas
so
the
they've
rest
always
of the world's
had
catching up.
Yeah, for many years now, they've always had that issue. So
they had like a massive boom. When everyone had a boom after World War II, they really had a boom. And so the government over there also thinks that exports are the only way to really keep the most important thing to the economy. A few funny stats though. Japan makes up 7 of their economy. 17% is exports. The UK is 25%, and Germany's 47%. And they're not looking to weaken their currency to increase exports. So for tankers, if you have a weak currency, suddenly your exports are cheaper on the market. So if it's only 50 cents Australian dollar versus the US versus today 72 cents, you're saving a large chunk to buy the same products in Australia because you buy them in Australian dollars. And so the Japanese still kind of think weak yen equals cheaper export. And they're also trying to fuel inflation because they've been stuck. The economy has been stuck for quite a while. But kind of just lastly share a couple of interesting pictures. So this is over the last, so they really started putting this policy in 2012. Hopefully everyone can see. I'll try and zoom in.
Oh, it looks good, mate. Yeah.
Yep. So this is the trade balance, and they want to get their trade balance positive, right? Because they believe that exports are a huge part of their economy, and they don't want to be bringing. Over the last 12 years, they've been basically, I think they've reduced the yen's, over the last 10 years, the yen has lost 40% of its value, so not 1/5, 40%. But they're still in trade deficits. And I think that's an important one to kind of take into account because their policy has been going for 10 years. And another thing that they're probably in a bit of trouble with some possible headwinds in conjunction with a wiki, is that today 20% of their exports, their biggest export market, is across to China, and Chinese and Japanese geopolitics is probably the worst it's ever been, and China's actually slowing down. And so what this means is that exports, their whole idea about exports being the key thing to their economy. There's probably some headwinds there with China and its buying power as well. And then if you just sprinkle a little bit of this thing called energy costs, which Japan does import a lot of natural gas from us and from the UAE and gets it at a fixed price, and they use natural gas as a big amount of their energy, but their energy resources outside of that, especially manufacturing, are going up as well, and capital investments going down. And so it's kind of an opportunity, again, where does the opportunity lie? You could just take this information and just add it to your, sprinkle it into your list of other just general information when you're making some decisions around the world. But you can actually look at, I think Arnie asked you in the week, how do you short the Japanese economy? And kind of did a bit of research out there and spoke to some friends in Singapore, and kind of there's a company called ProShares, which is probably one of the biggest ETFs. It's a daily one, so it looks to kind of use debt to negatively to basically short the overall markets, and tries to get about a 1 or 2x negative on the day. And it's a daily, so you can kind of dip your money in there, and if you're an active manager, and leave it in there as long as, because its target is daily though, because it can have adverse effects outside of that daily. But there is opportunities, and I think last share I'm going to put up is that, and just the performance of, just to kind of give the tankers out there a bit of an idea around the performance of said fund.
What are you getting at?
General in nature, this one, Brad?
It's general in nature. I'm not recommending this fund at all. I'm just kind of giving an objective view of over the last kind of 12 months. This was sitting at about 1380, got down to a low of about 1147, and we're back up to about 1731 over the last 12 months as their currency is devalued, and as kind of other things in the world, energy prices have gone up, the war, China, and the rest of it. There's obviously the return on the shorting fund, which is the ultra short MSCI Japan ProShares fund.
Ticker EWV. Yeah, just can I jump in there, because I want to just add
Please.
a little bit of my own thoughts to this, and maybe a general in nature, not financial advice, but I'll give you my own sort of rationale, which is leading me to analyze this or do a bit of research into this. Brad, you were mentioning that Japan sees themselves as like an export strong economy, and that's how they want to be. Like, they want to be an exporter and bring their money that way. But if you think about what they export, like the bulk of their things, it's electronics, or it's consumer goods, right? Yeah, high-end consumer goods, electronics.
And they've taken that mantle back.
Yeah, they have. But like, that's, as we were discussing before, like as there's rising cost of living, rising cost of energy around the world,
resources,
and they're going to have to rely on imports with a weaker currency, but less exports, because people are buying less of those discretionary goods. It's just a recipe for disaster over the short term that I see with Japan. So thinking about what's a good way to expose yourself to the short side, Brad just showed that ticker. It's general in nature, and yeah, that ETF rebalances to try and get daily moves. So it's probably not good for a really long term hold, but it's just something that I've been thinking about lately, and it's that economy, I feel like they're in a bit of trouble, and it's going to be a bit of a canary in the coal mine, perhaps, for other economies that have a similar model.
Yes. Just like Sri Lanka's kind of issues at the moment, a bit of a canary in the coal mine for about 20, 25 economies that have gone through a similar debt crisis to them and political crisis. I think, there's a few canaries. Now, Japan is very unique.
Yeah,
but at the same time, I think the economy is huge. And at the end of the day, I mean, what is the size of the Japanese economy, everybody? What number are they?
I don't know. That's a good
number.
Top
2,
10?
3. I'm going to say 3. Jolie,
Top 10, 5 to 10.
And Arnie?
I'm going to put them at like I don't know, 8 or 9. I don't think
they're 3.
3.
So United States number 1, China number 2, Japan number 3, and Germany number 4. And Japan is sitting at about a 5 trillion economy, and Germany's at 3.85, and then United Kingdom 2.76, and then India 2.66. So it's about double India.
There you go.
Looking for them to drop out of that top 3 spot.
Yeah.
No offense, Japan.
No offense.
Yeah.
You'd expect it. In wrapping up today, Arnie, did we have any 50-50s today to throw up?
We don't have an official 50-50, but
Collingwood or Melbourne for
Queen's birthday match.
Queen's
I love
birthday.
this one.
Birthday.
The
Queen's
D's
birthday.
coming.
I think with Jolie kind of as the neutral vote here, right?
No, Jolly goes for the D's.
Oh.
Can't you see my picture in the background, mate?
Look at the Premier's picture in the background, mate.
that's
For the
disgusting.
takers, Brad's a Pie supporter.
So this is
I'm
going to
all-
be an easy one,
I'm,
isn't it?
I'm obviously going to back into D's just to get, to rebound off the losses and all the bad news about May and Melksham in the media. So, yeah, I'm going with the D's.
Go Pies.
Old Frothy's May.
What do you reckon, Jolie?
Yeah, D's to bounce back, mate. Big Queen's birthday. You guys got us last year, Brad, so we owe you one. So,
Hey, look, I said Carlton against Collingwood, and we won that one.
yeah.
I'm
No,
gonna say- you know
it'll be a
what?
good match.
I'm probably going to say D's.
It'll be a good match. Pies are in probably better form than we are, so but I think the odds are same Melbourne. But yeah, we'll see how it all transpires on Monday.
We're going to go 3 D's here, boys.
Go the D's.
Sacrilege
Oh,
Collingwood supporters.
beauty.
But,
Well, thanks for all the listeners. Next week, keep an eye out for us. I'm sure we'll have some great Q&As, and Arnie, just to tell the tankers where to get us again. Keep sending them in, guys.
At Money in the Tank, YouTube, Twitter, Facebook, Instagram.
Yep,
Like
all
and
your
subscribe.
questions, and we'll always try to get to them. And keep well. We look forward to seeing you all next
keep
week.
it all.
Cheers, guys.
Cheers.